Hey everyone, welcome back to Corporate Decoder. Today DVN just filed a prospectus supplement and I am seeing a move that signals a big shift for the company. Quick note, this is not financial advice, just my take on public filings for educational purposes. Devon Energy is officially getting ready to issue new stock related to its Coterra Energy acquisition. And this filing tells us how. Alright, let's jump into what Devon Energy Corporation just filed with the Securities and Exchange Commission. This is an 8K form, which is basically a report for when very important things happen that shareholders need to know about right away. The report is dated the 5th of June 2026, and that is the day the key event we're talking about happened. This is all about Devon Energy, a big player in the energy sector, as you know. Now here is where things get interesting. Devon is registering up to 175,000 shares of its common stock. This isn't just printing new shares out of thin air. These shares are actually going to be issued when something specific happens. What is happening is that Devon's common stock will be issued when holders of a specific kind of preferred stock called Coterra Preferred Stock decide to convert their preferred shares into common stock. Think of it like this. People hold a special type of stock and Devon is telling them, hey, you can swap that for our regular stock. This is directly tied to the acquisition of Coterra Energy. Remember that big merger we talked about? This filing is a direct consequence of it. They're essentially finalizing the stock mechanics from that deal. And to make sure everything is on the up and up legally, they've got a legal opinion from Skadden, Arps, Slate, Mega and Flom. This ensures that the shares they are registering are valid and can indeed be issued as planned. This is standard practice for large issuances, especially when they involve complex financial instruments like convertible preferred stock. Now, typically on these 8K filings, we look for financial statements or exhibits that give us more meat. In this case, the main exhibit is that legal opinion we just mentioned. This filing isn't about revealing new quarterly financials, but rather about the operational and legal steps being taken after a significant corporate event, which was the Coterra acquisition. So what does this really mean? Devon is fulfilling its commitments from the Coterra merger. By registering these shares, they are prepared for the conversion of preferred stock into common stock. This could signal an increase in the number of outstanding shares. For existing shareholders, this could mean some dilution, meaning their ownership percentage might slightly decrease if the conversion happens on a large scale. However, it is also a sign of a completed and progressing acquisition, which is generally positive for expanding the company's asset base and reach. We saw news headlines confirming this filing on the 5th of June, indicating that the market was aware of this upcoming step. Looking back at the context, we see that Devon filed a prospectus supplement. A prospectus supplement is an addition to an existing document that provides updated information or details about securities being offered. In this case, it is adding details about these 175,000 shares. It's part of a larger registration statement showing this is a planned and regulated process. What I am watching here is the actual conversion rate of the Coterra preferred stock. The filing mentions additional shares that may be issued in connection with stock splits, stock dividends, anti-dilution provisions, or other transactions. This means the final number of shares issued could be more than 175,000. Depending on what happens with Coterra's stock and any protective clauses built into that preferred stock, this is something to keep an eye on as the merger's mechanics play out. This move directly follows up on major developments like Devon keeping a full swap payout for Coterra bondholders through June, as reported by Stock Titan. This filing is the next logical step to absorb and integrate Coterra fully. It is not a surprise, but it confirms the path forward. My biggest concern with these kinds of filings when they involve issuing new shares is always the potential for dilution. While 175,000 shares might not sound like a massive number for a company of Devon's size and market cap around $50 billion, it is still an increase in outstanding stock. If the conversions happen rapidly or if there are other dilutive events, it could put some downward pressure on the stock price in the short term. However, the upside is that this is a sign the Coterra acquisition is moving towards completion and integration, which should ultimately strengthen Devon's position in the energy market. Alright, that is my take. Stay decoded if you found this breakdown helpful, give it a thumbs up and subscribe for more. The tools I use for research are linked in the description.